Hey everyone, it's Zach back with a new mortgage video. Hope you all had a happy weekend. If this is your first time seeing one of my videos, welcome to my channel. If you're a returning viewer, welcome back, where I'll try to demystify all things mortgage related. If you find this content helpful, please like and subscribe. So today I want to talk about a very wild week in the mortgage realm last week, try to decipher the movement and talk about today. We've had some improvements in mortgage rates and talk about that and other things that I think could move the needle this week. So last week was a rough week for mortgage rates, and it was really all driven by tariffs. The two major reports that normally would be driving mortgage rates both came in better than expected. Consumer price index and producer price index on all counts. You've had some times where the headline numbers, headline CPI and core CPI, were saying one thing, and then the underlying metrics that feed into personal consumption expenditures, which is the inflation reading the Fed cares the most about, went the other way, and the market reacted to those underlying metrics. In this case, everything came in better than expected. And yet, mortgage rates continued to get worse on both days of those readings. Now, Thursday, there wasn't even really any real news to explain it, but at least Friday, we had a reason, and it was, once again, consumer confidence, this was the preliminary reading. And notably, based on that survey, consumers are expecting higher inflation than we've seen since 1981 in the next year. So that lately has been a major market mover. In this case, it far outweighed the lower than anticipated producer price index figure that same day. The one positive part of the week after Trump announced the pause of tariffs on all countries outside of China. So it's very clear in this environment that any news about either pulling back tariffs, pausing tariffs, that would be at least a temporary positive for mortgage rates. Now, one big thing to talk about is I've mentioned this inverse relationship between the stock market and mortgage rates. Last week, that wasn't happening necessarily. There were days where the stock market got worse and mortgage rates continued to get worse. My reading of this is that despite the stock market going down, which typically leads to investors putting money into bonds, which are a less volatile asset, now it seems like because of this escalation with the trade war with China, investors across the world are less trusting of the US Treasury and the potential that we'll pay back our debts. This is what you're relying on when you're buying Treasury, the US government's ability to repay their debts down the line. And one report that I think may have contributed to mortgage rates rising despite the stock market declining is the US passed a fiscal budget, that will drive the deficit up. So the way we finance greater debt, which already we have a lot of, is releasing more Treasury bonds. And if they're at a higher interest rate, it's harder to repay that. So I think there's an element of distrust in the US financial system in general right now. And I don't think in the long run, we may have single day reprieves like today. We've seen some improvement in mortgage rates, but I don't think it's going to last until we see more stability in the current environment, which ultimately I think will have to be, here are the tariffs, this is what they are, and we're not going to change them. Because ultimately, lower than expected inflation in a funnel is a good thing, but with these tariffs, what's happening is we keep changing the economic ground that we're standing on. And so, these reports that I was talking about, CPI and PPI, were for March, and these tariffs were passed April 2nd. So that data doesn't really bear any relevance when the tariffs that have been announced and then pulled back and then escalated with China are dramatically shifting the landscape that we're on. And if that continues to happen, if for the rest of this month into May, we continue to have these pullbacks with other countries, either escalation or temporary de-escalation with China. The same thing's gonna happen a month from now when we get CPI for April. It's not really gonna matter because we're continuing to change the landscape that we're on to where past data is irrelevant. So ultimately, previewing this week ahead, I mean, we've got retail sales on Wednesday. Normally that would be the biggest market mover. It's a pretty data light week in general. And on top of that, the data hasn't really been mattering. It's all going to be what happens with these tariffs. If we see a pause or some kind of agreement with China, especially, that will have a positive effect. But the longer this plays out, I think the less some kind of resolution is really going to help. If you have any questions or comments, feel free to shoot them below or call, text, or email me. But thanks for tuning into this video, and I will see you next time.